sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm just going to be going over Bitcoin. I'm going to do some quick and short updates, all the powerful ones but to go ahead and get started here as another update on this daily chart that I've been going over recently. What I want to point out again here is the RSI down here. Like I mentioned, this month and a half resistance, RSI resistance we've been seeing, we are starting to print, as you can see, an upward slope from the bottom of May 12th to the bottom we said on May 26th. Take a look at the price up here. You can clearly see that we have a negative slope overall going back to those corresponding bottoms, also within this general descending channel we've been in, going back to the local high, the highest local high, April 14th of approximately 31,000. Again, as I mentioned, some people are kind of, saying this could be a bull flag towards the upside. A lot of people recently I've been seeing within the last few days have been calling what this is right here a double bottom, and we're going to eventually go towards the upside. Again, like I said, we're seeing essentially bullish divergence. As I mentioned in the last video, seeing a lift off of all three of these indicators, RSI, stock RSI, MACD respectively, in order. But outside of that, again, whenever we do breakout, however we do breakout, I do think generally it will head just towards around 37 to 47,000, just an approximate $10,000 range, lining up with, as you can see on here, this Fibonacci retracement. Again, what's more taken from our absolute low, 15.4 thousand. Back in November to December of last year, towards the local high that I already mentioned in April, approximately 31,000. Again, lining up with the golden pocket, which again I use 1.382 to the 1.618. I have a deviation towards the low of 1.272. Again, 37 to 47,000. But what I'm specifically, like I've been mentioning recently, to go ahead and zoom in here, either we have already found our local bottom, those people calling for the bottom that I pointed out. Either we'll break out and we will essentially just continue to move up. Maybe we'll come up, do something like that, and then head towards that range that I just mentioned, or we'll follow along with this green pattern. As I've been mentioning, there's really no reason to doubt a drop down to the 22.6 to 25 so basically 22.5 thousand to 24.5 thousand dollar approximate range, which would just generally line up with this bullish megaphone pattern that I have been pointing out for quite some time. We've basically been in a very long extended retest or consolidative retest before we go towards the upside. Either we will go to the upside here more quickly without seen more significant downside, or we will get this downside into this type of green pattern and then head towards the upside overall. And also, again, it does line up with, as you can see right here, this turquoise. This would be the 0.618 of that same Fibonacci retracement. Again, also just further lining up with the golden pocket, the first iteration of. So once more, let's say if we come down even more, like I said in the last video, just somewhere around 10 to 15% more towards the downside, which seems most likely. But let's say we don't see that. What we need to see here is, as laid out with the 3 dash trend lines right here, until we start to see the price significantly, push towards 27.5 thousand, but more ultimately, finally break above basically $28,000, more around 27.8 to $28,000. Generally, this is just as the most keynote, lining up with this 800 EMA estimated moving average, this darker moving average, this darker purple or darker blue moving average. You can see if we go back to right here, and right here we found support, but we obviously right here broke below it, and we are making this W bottom, or potential W double bottom pattern, as people are pointing out. So perhaps, like I said, we do break out above something like this, we hit this upper resistance of this, what could be this bull flag channel, come back down, retest the 800 EMA, and also these 3 yellow dashed resistances to flip it back into support, and then we break out more quickly here, or again we follow through similar to this green pattern, basically becoming at the final moments, at the final retest in this, like I said, it's kind of long, boring, bullish consolidative retest. We'll entangle with the white 200 estimated moving average right here, eventually bounce back up, hit this range. According to this pattern, we would basically, it would line up with breaking the ascending support, or my bad, resistance, going all the way back to the very beginning of the flag portion of what would be this bullish megaphone that I pointed out, going back to specifically January of 17. This general, wow, that was terrible, this general range right here until we eventually finally break above that, heading into this $37,000, $40,000, $7,000 range. Also, there's plenty likelihood that we, close candles higher, and or outside of that, just get some wicks more towards like 48, even 50,000, come back down, then retest that range, as I did noted. But in order to support that, and so update 2 monthly charts I've been going over recently again. Here with this chart, again, this Fibonacci retracement, just to zoom out if anybody's new to the content or you haven't seen my recent videos. It's the most macro Fibonacci retracement you can take. Goes all the way back to the inception price at 0 to the very first cycle high at around $32. It lines up with right where we currently are. We deviated a little bit below. We're obviously in the golden pocket. We deviated, we came down pretty much right down to the point, I think it's the 0.577 of the upper range of the golden pocket, slightly below the 1.618. Now we have broke above the 1.618. Our current candle still has about 4 days left in it. Opened above and is at this point most likely, unless it start, it would, in order for it to close below, it would basically have to hit that the lower range of what I said on that daily chart, pushing towards 22.5 to 22,000. Although closing below the 1.618 to me personally isn't the big thing right now. If we were to open and then close a candle, especially this a monthly candle, but also just further going down to the weekly and then the daily below this same retracement, then that would be room to perhaps worry that we would then head towards 20,000 and maybe even lower, like I have been mentioning recently. But everything is still looking great here. Overall, there's nothing really to update on these indicators. They're still kind of continuous to look similar to each of these red bubbles in the past, previous bull runs, going all the way back to once more 2012. But I do believe we will continue just to head up from here again with these green arrows, pretty clearly pointed out where I believe we are most likely are, in my personal opinion, going back to basically September, August of 2020, before the run we saw after the March crash. Here on this chart, I haven't pointed this out specifically on this chart, gone over this chart before, obviously, like I said earlier. This kind of being my end-all be-all chart that has everything, all of the, so the stock RSI, MACDs are all these color codings of these candles you see. That is all 3 of those indicators, just nicely, very simplistically put into the color coordination of these candles. But what I wanted to point out is each of these, so in total 5, or you could just look at it as 4, I suppose, yellow lines with bubbles, circles pointing out to each of these candles, going all the way back to the bullish retracement, retest of the slow daily moving average, acting as support, the black moving average that you see here, going on again, like I said, July of 2013, halfway through the technically the second super cycle, or according to my theory, super phase. You can see again, we retested that, bounced into the final high of that super phase, and then we also found it right here in October 2013, entered this bear market, got below our, I forget what it's specifically called, but clearly these purple dotted moving average, this moving average band of the pi cycle indicator, printed pink vector candles, highly oversold. Finally started to break back above. We got the crossover, we got the candle support along the 50, or just the daily moving average support. Again, we come up to 2017, come back below, print pink vector candles, we get the bullish flip, Didn't necessarily really see the type of support that I wanted to point out right here, but then you kind of just fast forward, we get this final W double bottom of inherent to the phase harmonics of this phase 1 we'd be in, starting back from 2017, heading to our current time, still being in the phase 1 of Bitcoin cycle system, according to the way I view it. And then finally, after the March crash, May to July, we got 3 consecutive candles basically. Closing above, if not opening above, but in general just obviously closing above the black daily moving average support, acting as bull market support, and to the high leading towards $64,000 approximately. And then now right here we are seeing the same thing. Our most recent candle of April opened above, then it continued to close above, not even really retesting it at all, didn't even touch it. If I go ahead and actually, I'm not going to do that because it's going to mess us up, but you can see clearly that we didn't even touch it right here at all. Now we are currently on our current candle. Again, we have about 4 days left. I don't think we will likely see that drop down to 22.5 to 22,000. I feel like 23.5 to 24.5 is probably more likely if we do get that further downside. But right now we are again with this red candle testing it. Again, like I said, we've gotten pinks, we got the pi cycle lows, we've got the turquoise vector candles printed as well. I mean, we're essentially seeing quite literally everything we need to see and you would want to see to essentially, with as much certainty you can possibly ask for, to say that we are very likely, at the least, heading into the next bull market again. Like I believe we will just have very similar movement. It's basically starting from about right here in this area, going back to August, September 2020, towards, like I've been saying, around $225,000 approximately, around $210,000 to $235,000 approximately, is where at this point I think is most likely. But like I said, it's going to be a quick video. Everything being said, hopefully you enjoyed the content. Hopefully you were learned something. Outside of that, I hope you all have a blessed day.
Ooh, I'm regretting now, won't I see you forever, start to